Welcome to the Real Estate 401k Show. Here are your hosts, Ryan Gerdes, Mike Weinstein, and Justin Frederick, helping you build a legacy of wealth through real estate. Powered by the Recon Group at West USA and the Frederick team with Fairway Mortgage. NMLS number 625918.
This is the Real Estate 401k Show with your host, Ryan Gerdes, Justin Frederick, and myself, Mike Weinstein. I provide a very valuable service to mankind.
In your humble opinion?
And I'm also the most humble guy I know, right?
Sure.
I have verified the rumor. I've verified the social rumors. The McRib is back, boys.
Oh, God.
'Tis the season.
Never fails.
Okay.
He's always the first one on it. He's always the first one to know. I don't know how you pull it off. How many people call you and tell you?
Oh, that's how I find this out. I mean,
Yeah.
my Facebook and all the direct messaging in Facebook blows up, and I appreciate my fans. I appreciate the love and support.
Sure.
So,
One day, I'm going to ruin it for you. I'm going to make you a ribeye or rib sandwich from my own smoker, and you're never going to be able to eat those.
You
things
should do
ever
that.
well,
again.
let's do that tonight. I mean, why wait?
Why don't we just cut this podcast short and just go right now?
All right, Justin, down to business. Last week, incredible news. And for those of you, well, if you're listening to me, you're listening, you're going to want to go ahead and text the word RATE to 623AZ Recon. That's RATE to 623AZ Recon. But last week, great news. CPI numbers came out, and great news on rates. And we're going to get into an incredible strategy that if you bought a home within the last, or not within 18 to 24 months ago, you're going to want to tune in and stay listening.
Yeah, rates have been doing some tremendous things, and to me, it kind of happened just all of a sudden. We weren't expecting to get this news, and we've seen rates that last week and the previous 10 days. We saw it move about 0.75% down over that period of time, and what a wonderful thing to see start to happen. It seems like this may continue based on the CPI coming out to Consumer Price Index, and that basically shows that inflation is slowing pretty significantly, and that's what the Feds were hoping for. So let's keep it rolling, right?
Well, and we've been saying, Ryan, for the last 12 months, be on the lookout, because when rates start to drop, the market's going to get really smoking. And I'm expecting, January, February, March, the market to be, start really picking up. Take advantage of the holiday season when a lot of buyers aren't out there, and get into your home now.
Well, like we talked about last week, I mean, it's just when you're coming into not just an election year, but a re-election year, they want to make sure that voters are happy, and the best way to do that is to adjust rates and make things more affordable, make cost of living go down, and whether or not everything was true or not, I mean, it is pretty convenient that all this is happening right now, but I'll take it, right?
Yeah.
I think it's a good opportunity for those people that have, obviously either been on the fence or, they're waiting to sell their home because they don't want to get rid of their 3% interest rate. I'm not necessarily saying that rates are going to be there at any time soon or ever. But I mean, most people, the magic number is around 5, right? They say, I don't want to exchange my rate at 3 to go to a 7, but if I have something in the 5s, I'll push the button. And so I expect that once we see the rates do even better, that we will start seeing more sellers and more inventory go on the market. And so that is exciting too, because even though we've had the year that we've had with interest rates, we've still seen a very, very short amount of inventory.
All right, if you're looking to build that strategy, see where you fit into the scope of rates and what you can qualify for, go ahead and text the word RATE to 623AZ Recon. That's RATE to 623AZ Recon. Well, Ryan, you've been a busy boy, going back, and, we always track our clients, because our job as real estate wealth managers is to help them build wealth in real estate. And so we are going back to those of our clients that bought a home 18 to 24 months, because there's something that they need to start paying attention to.
Yeah, so good buddy of ours and client of ours, Josh Ruiz. Hey, thank you, buddy. Hopefully you're listening. I was on the phone with him this morning. He just recently put in this beautiful pool, did some remodeling on their home, and he said, I think I got it figured out, but I was just trying to call you to make sure that my brain was working right. And I said, well, yeah, what's going on? And he said, well, we have this mortgage insurance, and I don't really know what we can do about that. And I was like, man, you are right there at your 2-year mark, aren't you? And he said, yeah. And I was like, well, if you have a mortgage that's in good standing and you put anything less than 20% down on a conventional product, then you're paying mortgage insurance more than likely until you either reach that threshold that you've paid off down to 80% loan to value, or you're going to have to give them a call. And he said, well, yeah, I'm paying over $240 a month on this thing. And I said, well, all right, here's the protocol. Every bank is different. And Justin, I definitely want you to weigh in on this because you know more of the idiosyncrasies than I do. But I said, you have a conventional product. You've put easily $100,000 into this place. You've owned it for just about 2 years. Your mortgage is in great standing. Let's get on the phone with your lender and have a discussion with them about removing your mortgage insurance. And there's going to be a handful of things you're going to have to do. You probably have to fill out some paperwork and probably get an appraisal. But then after that, they should remove it so long as you're within those guidelines. And so he's like, oh man. So I'm excited to hear back from him as soon as he's gone through that process, because he was on cloud nine that he was going to be saving an extra $240. And I know that's not a big deal, but that's
a big deal.
That's year over year. Once you add all that up, basically he's saving over $3,000 a year on that, and that's Christmas.
And he's
going to
have 28, and he has 28 more years on that mortgage. So that's very significant.
And he's just itching to grow his real estate portfolio, and so all that's going to do is just create more runway for him to have a little bit more cash in the bank in order to move on to that next one. And so it was just a fantastic conversation. But Justin, talk a little bit more about the idiosyncrasies on what you see most banks needing in order to get rid of mortgage insurance.
Sure. So conventional loans, unfortunately, if you have an FHA loan, you're going to have to refinance out of the FHA to get rid of mortgage insurance. But most likely, if you're in an FHA loan and you bought 2 years ago, your interest rate's so good that it doesn't even matter that you have mortgage insurance. Honestly, if you add that in, your interest rate altogether, even including your mortgage insurance, is going to be nice and low. But you can never hesitate. Call in. We can walk you through it and take a look at it. So conventional financing, they require you to sit in the loan for 2 years to use a new value. If it's prior to 2 years, you have to go off the original value of the property or the purchase price, whatever's lower. And then they'll remove that mortgage insurance if you're below that 80% within that first 2 years. And that comes from HIPAA. So they... HOPA.
I was about to say HIPAA.
HIPAA's
when did we get into the medical field? Yeah,
that's our other podcast.
Yeah, people been telling stories about me or what?
So they have to remove it. Even if you're a couple months into your mortgage, if you come up with a lump sum of money and you pay it down, they have to drop the mortgage insurance if you're below that 80%. Now, for them to automatically drop it off, you need to be below 78% of the original value. So that's why you want to call in, because they don't care that the value's been going up. They're not trying to look at that. They want to keep that insurance there.
Yeah, they want you to pay their insurance for them.
Yeah. But if you know that your value's higher, call in and you guys can do an evaluation of the property and tell them where their value's at or what it's looking like. Yeah, most likely they're going to want to do an appraisal. Sometimes they do drive-by. Sometimes they get away with an electronic evaluation and you don't have to pay anything. But most likely you're going to have to pay for an appraisal.
All right, if you got some questions about mortgage insurance and got questions about the value of your home and you'd like some guidance, go ahead and text the word RATE to 623-AZ-RECON. That's RATE to 623-AZ-RECON. Now, Ryan, I can't help but think there's people listening going, well, I don't need to text into the podcast. So I'm just going to go to Zillow and get the Zestimate on my home.
Yeah. I've had about 4 different people call me talking about stuff that's on Zillow. I mean, it's getting more and more flagrant. I'm seeing some pretty big, differences in, what they're marketing versus what the actual is. But, I mean, people, it's not that big a deal. Zillow is fantastic as far as a frame of reference or just, kind of get an idea of what some people have put their property on the market for. but it's like the Wikipedia of real estate. Like I can put anything I want on there. I can list your home right now without your signature on Zillow, and I can represent it any way that I want. And there's really no repercussions because it's not a federally regulated institution. It's just a business. And what
it's a marketing company is really what it is.
What they do is they put this content on there, which is real estate content and lending content, etc. And then when you call in or you submit your information online, they take that data and then they sell it to either a lender or a real estate professional or a title company or whoever that feels that they can benefit from it, and then they put you in touch with it. That's not a bad thing. I just think that most people don't really understand what their position in the market actually is.
Yeah, and so what I like to explain to people when we get into the conversation of the zest of my home, first of all, there is no that I know of. There is no automated system out there that's going to give you the value of your home, the exact value of your home. It's old school. It takes us, 20, 30 minutes of doing research and looking at comps and so forth for us to come up with a value. So there is no automated system. And number two, there was a day and time, if you guys recall, Zillow was in the market of buying homes.
Yeah.
And they're no longer buying homes.
That did not pan out.
They're not buying homes because they were overpaying for homes because of their software.
It turns out their estimate wasn't that reliable. But I applaud them for putting their money where their mouth is. But the problem is that it's just so manual. Now, the only time that it really works is if you own a home that's been built in the past couple of years by a new home builder, and that builder built the same exact home over and over and over again, and all of those closed within the past 6 months, then you're going to get some pretty accurate stuff because they're just dealing with repetition there. If you live in a home where you've done anything to it or there's any type of customizations, then you cannot rely on it.
Mm-hmm.
All right, if you'd like some help, some guidance as far as finding out what you qualify for, where the rates are right now, questions about mortgage insurance, questions about the value of your home, all you got to do is text the word rate to 62. I forgot what it was, but text the word rate to 623 AZ Recon. That's rate to 623 AZ Recon.
Thank you for joining us on the Real Estate 401k Show. If you want more information on how to build wealth, click on the link or text us at 623-297-3266. That's 623 AZ Recon.